What's going on, guys? Just give me a quick sound check. We'll give it a minute or two and then get started. Sounds good. All right, cool. I'll still give it another minute. Give people a chance to trickle in. So apologies, I changed the time kind of last minute. Hopefully you guys were able to tune into the Sync Quote Spaces today. Myself and Trader Main get together every week. Normally on Mondays, but today we did it on a Tuesday. Talk about the market. Talk about everything going on in markets. So, I'm gonna follow it up with a stream. I'm gonna try to keep this short. Short is like hopefully around an hour. I feel like there's some things worth touching on. Obviously yesterday's great trading opportunity that I should have held on to much longer, but I think I've been kind of conditioned now over the last couple of days to focus really on the shorter term, trying to be a lot more tactical. I think at least until we're past what I think could be a shifting event, and that is the inauguration. But we'll get into that in a second. Before we get into anything, just as a reminder, none of this is financial advice. I reminded you guys in the Telegram about this because I know a lot of you guys are trading on Femex, but they're doing a trading competition right now. So there is a cash prize for that. That is always nice. If you're already on the exchange, you might as well take advantage of it, honestly. I normally don't participate in exchange competitions. I mean, I participate, but you don't see me sharing them too often. And the reason is like a lot of them are, I feel like a lot of them are thrown up when there's like nothing going on and the exchanges are like, please give us money. And, it's a time for people to churn, basically, to trade a lot and for exchanges to earn fees. But it's always nice when there is a competition during, a period where volatility is up. Obviously, we've cooled down a little bit, but if you're already on the exchange, I mean, might as well, if you're trading actively, you might as well just enter in the competition, right? So I think that's worth noting. I know a lot of you guys trade on Femex, but anyway. So I don't know if I already said it. Yeah, none of this is financial advice, strictly for entertainment purposes only. Give it another minute, see if anyone else rolls in. Hold on, got a couple points jotted down. I've done the smart thing of finally, you guys, like, if you followed me for this long, you know that these are like really just riffs, right? I speak pretty extemporaneously. I am often all over the place, one thought to the next, and that's because I never would write like an outline. I would just hop on here and shoot the shit. And, that gets kind of frustrating from time to time to do that, because there would be times when I would set up at the desk the intention of streaming and touching on like very specific points, and why the fuck I didn't write them down, I don't know, because I would expect myself to just remember them. And I can't remember what I did a couple of days ago. Like at this point in my life, like with a 2-year-old and trading these markets, like my memory is, it's going. So I jotted down a couple points. So really quickly, I think, the thing worth talking about is obviously yesterday's opportunity across equities and BTC. So I was on a podcast yesterday with Salsa Tequila. That should be out. I think that should be out pretty soon. And we were talking about, where we like to trade, what brings us into the market, where we like to get the most involved. And honestly, it's where people are forced to get involved. So, we had a range that was going back to November, end of November, after a major move that was a catalyst-driven move, a market-shifting move and Trump winning. We were in a very defined range. We took the highs. We had that Hyundai roll. We had a move up to 108. And then we were trading in the lower portion of this range for, the latter part of December through the holidays, beginning of January to this point. And we hadn't taken any really significant lows. We hadn't really taken any of the lows within the structure. Lows have been very respected, but above the lows, not really the pico lows, or the extremes. Anytime you move to the extremes, whether it's to the upside or to the downside, one side of the market's going to panic, right? One side of the market is either overexposed or underexposed. Any move to the downside is obviously going to create a ton of fear. I mean, not for nothing, you can just do a quick eyeball test of price history and look at how many times the market has moved up on a significant catalyst, right? I would say this is a fundamental catalyst, having this kind of precedent. Has been spot driven. We know it's ETF flows, we know it's Sailor, but this move has not been in its entirety, like move up from last range, perp driven by any means, right? This is spot driven. Okay. This is a break outside of a very long range, going back almost a year, right? I mean, we're going back to March. So this is a significant breakup. Like, it's very unlikely that the first retest of the lows of this structure, even grinding down to it, is going to be the one that just sends us all the way back down, right? It's more than likely you're going to have, and if you look at how prices behaved over the last year or so, it's like there's multiple shots at lows, right? There's multiple new lows created, and then the same effect at each subsequent low as well. So this was the first ugly move back down. I mean, it was on the back of a couple things. It was on the back of some repricing in the bond market. It was on the back of whether or not, the government's going to be selling BTC. I think, again, with each passing day, you have to recalculate the probability that they're going to sell it, because we're getting closer and closer to the inauguration. Are they going to try to jam it down everyone's throats in the last second, and leave that with Trump? I think it's less likely, right? There's no news on that. The wallet hasn't moved, the balance hasn't moved, and I think that's telling in and of itself. But again, we approach an extreme, right? This is a place where people get involved manually. They short the breakdown, they panic sell positions, and then also involuntarily, right? People are stopped out, liquidated, yada, yada, yada. So you have an extreme, and then you have a ton of participation through the level. I mean, it kind of set up to be a pristine setup. So if we just look at BTC through that low, you had a bunch of selling into the low. There's actually not that many times lately where funding has gotten this jammed in the shorter time frames on the back of a big increase in positioning. Like a lot of times it's been, all right, so you have a move jammed down towards the lows, at least more recently. Positioning increases, but funding still stays like kind of baseline. This was like pretty broken and stretched. So that's worth noting, right? It was through the level, a bunch of participation came in, anticipating a further breakdown. And you actually had a brief tap of like, I don't know, what was the like 80, I don't know, here it is. I don't know why I'm trying to guess it. It was like 88.9. So a 1,000 point move below 90 handles, very significant, big round number. And immediately market snapped back and started trading back above and was rebid above the level. And it was just at that point, like, let's just say like a cannibalistic move taking out shorts because all that positioning moved up. I would not cannibalistic, like poaching, put it that way. Like when this market has, it's worth knowing, right? Norms, right? Having understanding of how this market behaves, the average volume intraday, the average volume in New York session, Asia session, London session, what kind of increase in open interest matters. Obviously I always say absolute levels in open interest don't really matter. It's the change in open interest over a short time frame that matters. So like open interest is like continuing going up with price. Like that's not that important. It's not like you look at that and say like, okay, there's a ton of leverage in the system, we're fucked. It's like, all right, price goes up, getting more people into the market. It's following price. It's not changing massively. What matters is when you have like a decent price move and then the corresponding open interest increase is drastic. So in this case, the move down was like 8 to 10,000 BTC. And I've said this numerous times. Like if you don't know anywhere to start, I would say if you want to learn how to trade this market, one of the things you could do just from a price action flow standpoint is like go to all the major catalysts that we've seen over the last couple of years, grab a chart, open interest, and look at the periods where those major catalysts occurred. So study the price action during those times of stress. If you could afford to pay for advanced software like Sierra or Bookmap, then you could actually load that data and see what the tape looked like as well. But then just look at large increases in open interest, like how they've been rewarded or taken out back, not rewarded, right? Taken out to the shed and a bullet put in their head. Look at anything that's close to 10K. So 10,000 BTC swells up. Look what the market does. It's very rare that you see that like all of that positioning is rewarded. Like it's more often than not that this paints like a big crosshair, a big red flag on one side of the market, and you'll see that the market trades back to that, that positioning that's offside, squeezes that positioning, and then does either continues upward, or if it's spot on the back of it, or resumes downward after punishing that late positioning, right? If you're late, you're always kind of screwed in more ways than one in markets as in life. So this was a great opportunity to get long. On the back of that, you have this kind of one-sided price action to low, if not just for liquidations and someone closing out a large short. It's just easier to move back up at that point because you've taken out a bunch of longs. I ended up longing what I would say would be considerably late. So I longed 91s. I waited for the rebid. So, there's many times when I don't wait for the rebid. So there's a lot of times when I just get involved here, right? We break through that level and then I'm back in as soon as we have like a 1 minute candle close, or if you look at like a seconds chart, it's honestly like any kind of engulfing of it could be like a 30-second candle. You could be looking at tick charts, whatever periodicity you're looking at. It's honestly the case that when you have a move through either above or below a significant level, and it's one of those cascading moves, so it's ugly in the short term, anytime the market starts trading back up like effortlessly, the book has very unlikely repopulated to be sticky. So the move back up is almost effortless. So there's many times when I would get involved. It's a matter of honestly timing and being right in front of the computer. There's many times when I get involved much earlier, but arriving late, like you have to wonder, okay, is that the extent of the move? Do we have any more juice? And that's when you want to see some kind of rebid. And I mean, down here, you're seeing a rebid to give you that activity period. And all that means is like, if I'm looking at, whether you're looking at the tape, whether you're looking at the actual physical time and sales, whether you're looking at CVDs, whether you're looking at, your delta charts, your footprints, your book map, which is nice because it has a large order tracker. All you want to see is that the bid is stacked at that point. And then more importantly, because that doesn't really mean shit because the bid could stack and then completely get removed. You want to see that it's willing to do business, right? So ideally, you get a bunch of selling, which happens. So you had this big squeeze up. You get a bunch of selling that comes back in, and it's unable to drive the market back lower. And if anything, what happens is you get a bunch of selling right back at the lows that immediately gets traded back above. So you might have like, a big move down, something like, for example, let's say just for shits and giggles, and we could actually probably scan back to that. I don't know if I have it loaded. Actually, don't even think I have it loaded. You look at something, yeah, it's cut off there. This is usually I have intraday, only the day loaded. The thing about Bookmap is it's great. I used to use it in 2000, 2001. For anyone who's followed me remembers that. It's just really intense on your computer. I mean, it eats up a lot of, I think, memory, GPU, and whatnot. What you want to see is that if you're looking at this in real time, you don't want to see something like this. Who knows how this turns out? I ended up cutting my longs from 96.2 to 96.7. You want to see that you're making in microstructure, not microstructure talking about the limit order book, but technically, yeah. But if you're talking about price action on the lower time frames, you want to see that you have this kind of upward drift, which looks like, this, but on the lower time frames. And then not only that, and even this right here, but you want to still see that there's a lot of selling coming in. And what you want to see is that that's getting absorbed and the market is still trading back above it. So if you're looking at, for example, that last chart, Bookmap, you see the level retested, bam, you have, 500 BTC sold, 50 BTC sold in the spot market, and then immediately the market is marching higher, and that's rebid, right? So that selling is now either underwater in the futures market if it was short, or doesn't matter. Whoever sold and got out of position, now the market's trading higher, and they're forced to think, hey, did I have a good exit? And this just happens all the way up. Bam, bunch of selling, and the market's rebid, and it just implies that there's sort of a shift in control. So this kind of setup, the best case scenario is trading back above the prior range before the breakdown. But I would say you treat this structure as its own mini range. So you look at the next sticky area being the underside of this to take profit. I ended up taking profit a little bit before that. Not for nothing. I had to go jiu-jitsu. And I don't like to hold positions during times of stress. But the ultimate move is back towards this high. And that's when you want to see either this level get flipped, right? So you have some kind of constructive price action above that level. Or not, right? And I think I'm inclined in these kind of conditions to take it, from, as the overly made fun of saying goes, from level to level. So that's that. It's not a complicated setup. You see these things very quickly, right? If you're used to looking at this. But this right now is a good move off of lows, but not for nothing. A lot of it was squeezing out that positioning. So it's very rare, in my opinion, that you leave a structure behind that looks like this. So you have that big move off. It's an imbalanced move after an imbalanced move. So it's not like there's a whole ton of constructive price action within this and, real spot demand behind the move. It's mainly because you had a very significant amount of positioning that had to close out all at once. And there's actually a well-known trader that had to close out, like Maine was talking about it today. Aguila, I think, closed out a, closed out a 2000 BTC short. So that was like 200 million in buying pressure right there. So I think you end up I think it's likely we just continue to chop, right? And I think it's more than likely we actually trade back down into this level over time. In the immediate future, not necessarily, but I think over the coming days, more than likely. Here is your anchored VWAP off of the low, which is always significant, right? All the positioning after this, it's kind of averaged about there. We're some distance away from it. I think if you came back down to that level, that average price, I think that would be a decent area to possibly look for a bounce. But in the short term, we have a couple things. We are still, semi-constructive above yesterday's highs, above last week's highs. It can go either way for me here. I think either this is maybe a trap setting up, right? Getting people to buy up here and then washing them out lower. Or we get a sustained move up to right around, I would say like 98.5 into this gap. And then either way, like the long that I took from this level, which I ended up getting down to 96.2. Again, I cut that at 96.7 already. So I'm already out of that. Like not happening fast enough for me. And it's not the best setup. It's like a 2-to-1 setup. I think that at best you're looking at something here. This whole area right now is, it's like the 50-day simple moving average. Once that starts to go sideways, on the daily, it's usually the case that price is it has flattened out. We're in need of like a catalyst right now, honestly. So that's why the inauguration is like, it's potentially a pretty big curveball. You have CPI tomorrow, right? So we went from cuts to no cuts. So prices are still supported though on the back of that repricing, which is good. Equities, I don't know. To me, it's like I think that they're going to go lower over the coming months still. So test lower. But again, Trump could come out swinging, but I don't know how much he's going to do for the equities market as much as he can help crypto if he says a lot about crypto, right? Crypto is much thinner. It's much smaller. So PPI came in soft today. I think it's worth noting that usually precedes a soft CPI. So we don't, expecting that to be hot. I don't think that's likely. If that was hot, things could get pretty ugly from that. If that's hot though, and the markets don't budge, then I think that's a really good sign of strength. I think the market is like looking for, after the repricing of cuts, right? How many cuts we're going to get, depending on what bank, different beliefs, but, whether Bank of America's opinion or Goldman but in terms of looking at like the rate calculator and probability calculator, I think it's down to what, like one or none, right? By December 2025. Any kind of soft data in the face of that, had the potential to cause a rally. But now we've had this rally. PPI is not as important as CPI, right? Only for risk assets, but yields not doing much, dollar not doing much. Trump tariffs talks obviously are, I think, significant. But I think this level right here to me is not like an area where I don't want to commit too much to this. I'm not really interested in any alts right now besides, like, honestly, XRP looks like it's possibly setting up. But yeah, as far as BTC goes, I think that it continues to chop, right? It does retest lower. I mentioned that. But the counter argument, or the counter to that, is if Trump actually does come out swinging. And there is rumor that he's going to. Like day one, essentially speaking to the crypto market, telling us exactly what we've waited for and want to hear. Rather than, day one, week one, 2 weeks in, and nothing has really been done. And then you have a market that has kind of priced in perfection at this point, looking at no further catalysts. So apparently he's going to come out, holding to his word. And who knows what that means? The guy can fly off the handle and say a lot. And we know that, like, during COVID, the guy was shouting out pharmaceutical companies. So he could come out saying things that are incredibly bullish for BTC. And again, like, big picture view, the thing to note is, like, we did get a tap of 80s. If we got a tap lower, and I was saying this for the last couple of weeks, if we traded 85, like, structure's still good. So we've had a shift in the macro, quote unquote. BTC has broken below the range, trading back within. We're going into an inauguration that is with a president that has been very positive for this market. If he comes out and adds to what he said and starts doing things right away, I think you have to remember that there is another driver to this market, and that's people buying the ETF. And I think that those flows would definitely pick up on behalf of that. And yeah, this market is in a good spot in that sense. If he doesn't, right, it's kind of like, okay, what's going on? We need a catalyst. We've had the ETF, we use that. We've had the election, we use that. And then it's like, all right, who's the marginal buyer at that point? But from a setup standpoint, other than, the this setup I still think can have some meat on the bone. So push up into this gap. But I think I like the market to move a little faster going into an event tomorrow, even though CPI is probably going to be cool. The setup right here actually is it's taking place in Lido, so it's almost identical. And Lido is not for nothing moving up without ETH really doing anything. I think that's kind of going to be the case moving forward. Like more idiosyncratic. The importance is going to be around what is idiosyncratic versus like sector rotations. You're going to have to be a picker. Like meme coins have definitely taken a break. The AI narrative has a lot going for it. You've seen Binance Perps put a lid on, what is it, AI16Z, whatever it is. But I think the things that, again, I've said this for a while, the things that Trump's wallet holds, the things that are related to DeFi, real world assets, things that actually have substance to them, it's a lot easier for them to move up now with this administration. And I think those were just forgotten about long enough that just positioning on them is not stale, but just is not there as much as it's now jammed into Solana and meme coins and everything else. Like the market has been looking away from everything that has been moving. The market was looking away from XRP for the longest time. Crypto Twitter is not a good representation of this entire market, obviously, because people outside this market think XRP is like the next, you name it, whatever, Amazon. Not even the same thing, but I think you get the point. Like they think they're making a great investment, and honestly, they have, right? People who averaged out XRP over the last couple of years and just kept buying were very rewarded at this point, but all at once. Like market just repriced so quickly. But Lido is the same kind of technical setup as BTC. This is the more bullish version. Remember how I said on the Telegram, how I ranked setups, right? Reclaims, retests, probes below, I've ranked them all. So it's very simple stuff, honestly. Anytime you have a structure like this, you have a breakdown and a reclaim, trouble here right away, trouble and failure. So continuing to break down from this level, probably going to see continuation immediately. Now you could argue maybe that area looked like it, but the point is very quickly accepted in this range and traded back to the highs and back above prior highs before the breakdown. So you have this kind of structure was consolidation, breakdown, break back above, and you're already getting this kind of under over. And since it's kind of, this is what I wanted to see BTC do, and essentially same kind of target. Like the idea is the target would be for this kind of lower time frame setup, retested that structure, constructive price action, and then trading back into this gap. So I don't know why Lido is moving. Maybe someone does, but it's not like, ETH is supporting this. It's not like people always looking for ETH beta, which obviously has not turned out well. It hasn't even turned out well for people just looking for ETH, right? So I don't know what's going on with that, but that's something that's worth focusing on, I think, moving forward. Anything, again, DeFi related, it doesn't matter if it's on ETH, right? I don't think that that's going to matter, and we covered that in on SynQuote today. As far as XRP goes, this is like the strongest thing, right? This is the strongest thing from a risk-adjusted basis. XRP is huge. It's like $150 million market cap, 225 FTV. I don't know how that works. I don't know I don't know like why that is. Why there's a discrepancy? Is there? I didn't know vesting or whatever. Like some XRP yet to hit the market. Either way, this is a massive asset. It is mainstream more than any other asset besides Doge, probably. And it is at the range highs still. And you have this kind of bullish structure, I think it's always worth getting behind. And that is, a very clean diagonal that's now broken, retested. There's a couple things worth noting. Like there are a lot of times when structures like this, one, they just get violated based on the passage of time. Like if price just kept moving sideways, all diagonals will have to be redrawn. But two, like depending on where we are, and this is a lot of the time, this is like for XRP, I think your indicator is BTC, right? Like Bitcoin has to be continuing up or supportive for this to have a breakout and continuation. Otherwise, the potential is like for this to one shot above the high and then get one shotted down, right? And you've seen these tops before where you've had these consolidations making marginally lower highs, looks like a breakout, breaks out of like a meme trend line, and then breaks back down in the structure after you've gotten everyone on one side of the boat. So this kind of structure, because it is at this point, we're going on 2 months, and it's kind of like I would treat it like a stock. Like, you don't have to, if you're, I think some people might be looking at this. Let me get back those drawings. I think some people might look at this setup and think like, all right, so I didn't get the retest on the trend line. Now we're like, X amount off of that already. Like, this is kind of late. Honestly, I think if you miss that, like, one, this is what you would want to see if you're looking for the breakout and continuation all-time high trade. So what is the XRP all-time high? This is it, right? It's the 289 level. So honestly, I think that if the market trades back above that, sorry, my drawing is getting all wonky. If we trade back above that level, so if you're clear 290, $3, listen, I think $3, honestly, because it's a very significant round number. You're going to get a lot of people selling in anticipation of that. So if we're able to, you have this flag, big move up, extremely strong, right? This is not fake. This is Brad Garlinghouse is standing next to Donald Trump, and a bunch of people are buying this thinking that it's, one, it's going to get an ETF, two, that it's an incredible investment, blah, 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 blah. That $3 level flips, and I think you have another big leg for XRP, right? Selling in advance of that makes sense because people are going to be looking for that round number sell, that all-time high trap. So my point is, like, I would just absolutely keep this on your watch list and have that for, so it's XRP, all-time high for XRP is 330, you said. Is that perps, or are we going back? What chart history are we looking at? So I'm looking at Binance, so that's probably why. So crypto market cap. So from a market cap standpoint, we're at all-time highs. Let's see. If we're going from the futures market, let's see, XRP, Bitstamp. Oh, Bitstamp. Okay, so Bitstamp, I'm less likely to quote because Bitstamp is extremely thin. All right. Objectively, it's an all-time high, right? But in terms of how it got to that all-time high, I don't know if that's like, my point is, I don't think people are gonna be focused on the Bitstamp chart. Put it that way. Like the place where most of the volume is coming in, where most of the attention is, where most of the positioning is going to be put on, it's going to be in the leading derivative markets and leading spot markets. So I think you could honestly look at this as a late breakout play. And this might mean a close through that level, but the point is, like, just holding the $3 level, right? You're going to have so many people selling in advance of that. You could run them over right away, but a move like this that's been this supported, willing to buy higher, right, and pay up to have that kind of entry. And it's so weird to talk about this, honestly, to talk about how bullish XRP is. I'm afraid to run into people I saw in the past. I don't know if I told this story. I've told so many stories about XRP because I've thought they've been so funny over the last couple of years. But I told my wife's uncle that he should sell his XRP and buy more BTC. And if XRP continued to go up, I would just pay him the difference. It was me basically saying, like, you don't have to worry. This thing's never going up, so I'm never going to have to pay you. But if it doubles, I'll just give you that money. I think he forgot about that. But I definitely didn't. That was at a summer barbecue. And then there was a guy that I ran into at Disney World. Short story, I'll keep this as brief as possible. With my wife, my daughter, run into one of her friend's mothers and her mother's new boyfriend. And I never met the guy. We're in the middle of a store in Epcot. And he's like, oh, have you been paying attention to what's going on in the government? I'm like, okay, fuck. This conversation is going to suck. And I'm like, no. And he's like, well, you should be buying some XRP and you should be buying some gold. And I was like, okay. I was like, well, by the way, sir, I actually happen to be a commodities trader, digital asset commodities trader myself. Not in those words, but I was basically kind of writing him off, but not being an asshole, but telling him, like, okay, yeah, I don't really believe that. And that guy's probably doing quite well. Kraken and Bitfinex also have it. Okay, worth noting. So either way, I think the $3. So if the $3 level goes, then then I'm talking about just local here, breaking out of this structure. If that $3 level holds, because again, it's a significant round number at that point, then maybe you just look to immediately 330. But I don't. My view is that wouldn't really hold too much weight anyway. So this is on the back of, again, like the best way I could put it was like using Bitcoin as the main indicator, right? So if Bitcoin is doing well, then I don't see a reason why XRP wouldn't continue to be supported. And I said on the call-in today, or not the call-in, used to do those, the spaces today, I think if XRP and Solana had ETFs at the same time, I think XRP would absolutely smoke it. I think all those boomers would absolutely love to buy XRP through their Schwab, Fidelity, Thinkorswim account, whatever. Schwab is actually now Thinkorswim. I forgot they changed over. But yeah. What else? Let me just look through the questions. I see some questions I definitely ignored because someone keeps repeating something about, and thanks for stopping in, Husky, and pointing that out. Atlas, let's see. Flashbanged. Yeah, sorry about that. Yeah, Tau is frustrating. There's a lot of, my view with any kind of major sector rotation has always been, because I'm not someone who's trading on chain. Like the money I put in on chain positions is comically small. It doesn't feel like it's ever worth it for me to trade on chain. I don't really use any kind of special infra or software to build positions or any of the more advanced stuff that probably everyone uses now. I'm like a centralized exchange purist, and most of my on-chain positions are like premium in options, like just expecting it to go to zero. It's a mega convex punt. So I don't dabble on chain. And my opinion has always been like, if I'm going to take advantage of a sector rotation, let me just see who the market elects as the winner, and then just take a position in the more liquid, larger representatives of that, that area of the market. And that's like a lot of the times that gets rewarded more than people think. Like I get it in this market. If you're working with a smaller portfolio, like you're thinking multiples. Me, if I do 25%, 50% on something, like that's a massive change. If I could put a lot of money behind that, like that's a significant increase in money, in my capital, right? Like if Bitcoin going to 100K for my cold storage was very significant, right? But I get it. People want to trade on chain because they're extremely convex. They are like options plays. I would rather buy something that is like the top of the category, like a Tau, and just have some ownership in that as a representative, right? And often, like you'll see that people actually, to the detriment, try to go too far out the risk curve of a specific category or whatever rotation is taking place, and they always are trying to find like the next iteration of the leader or the best beta to that. And a lot of times that falls flat. Like you should buy the leaders. So I thought Tau was going to be that, but I don't know. Like it looks like, again, the market keeps reminding everyone this cycle that it's a Bitcoin dominant cycle, and that liquidity is fragmented away from the market in a way it's never been before. And you're working with a market inside this market that is now limited. It's not like there's a bunch of new money that's come in. Like everyone moved the goalposts over the last year. When it makes a new all-time high, new retail comes in. When it breaks 100K, new retail comes in. No one like is discovering crypto for the first time anymore. The exciting cycle was 2017, right? That was really exciting. That was like Bitcoin's blow off was like a penny stock. Okay. It was like a GME, which is not a penny stock, but it was like they were trading like more like pink sheets than they are now. So no one's rediscovering crypto, and no massive group of people are rediscovering crypto. The money we're looking for now to come in is like the slower moving money that honestly will only come in when Bitcoin is cut in half from a vol standpoint. So Bitcoin's like a 60, 70 vol asset. When BlackRock puts a ton of structured products around it, they're going to squeeze the vol out of that, and they're going to make it much more friendly. And then boomers will add that to their long-term portfolios. So the idea of like massive new retail coming in, retail will come in maybe if there's another COVID-like stimulus, but it's not coming in fast enough. So money is just cycling around the market. and there's a ton of dilution, a ton of dispersion. So narratives are not lasting that long. And the AI narrative moved from, it looked like the majors to the extremes really fast. Like all the on-chain AI memes, I don't know shit about them, right? But ideally, the whole sector more broadly should be carried up if the market is really healthy. So I think, again, we're just being reminded, no, there's a couple things in this market that are doing really well. Everyone's trying to enforce this like prior cycle pattern, and it's just falling on its face. From a price action standpoint, Tau it's back at range lows. Like how many times I've seen numerous times things like this occur, where you just have market is sort of boxed into consolidation for a period of months, breaks up, and you're just building value higher. But it's not like there's a getaway trade anytime soon. It looks like that within it, right? It looks like this was going to race up, right? It depends on where the rest of the market is at this point because Bitcoin rules the roost. But from a contextual risk reward standpoint, like I'd rather be long down here than short, right? If you just treat these two regions as like a carve out of balance, right? Here's an area of value, here's an area of value. As long as we're respecting the prior area, the prior price range, I wouldn't be too worried about building a Tau position. Again, like this all is really contingent on Bitcoin, right? Everything is really sensitive to Bitcoin's movements to the downside. If Bitcoin's moving sideways and moving up, then things have like permission to move as well. From a contextual risk reward standpoint, Tau it's better to be, I think, long biased here with optimism than short biased. That could all change so quickly, right? If the market just accepts back into this level, it's like, all right, it's going to do what alts do. We'll end up doing something that like bigger picture looks more like actually a lot of things do, to be honest, like where they just continue to fuck everyone over multiple times, carve out for much longer than people anticipate. And then by the time this thing does move, it's like everyone has been shaken out of it for so long and they're exhausted of focusing on it. So I'm out of Tau positioning. As soon as we started folding, as soon as Bitcoin started folding, I get out of alts really quick. I have no tolerance for losses. I lose, absolutely. I lose exiting the position. I lose when it goes against my entry. But I have no tolerance for I don't have the thing in me that other people have where they have belief in alts. So I personally will not experience a 20% drawdown because I will cut at fucking 3%. And of course we know what that means. That means I'm going to be out of a lot of things, but I know what position I play in on the game field, and I see no reason to go from being a pitcher to a catcher, or from being a quarterback to a field goal kicker. You name the sport and you name the position change, like you have to know what your area of competence is. Let's see. Addis is a good platform. Exocharts is a great platform. I mean, they're great platforms. I think that, the best platform is like Sierra Chart. Bookmap is very similar to Sierra Chart. It's professional grade software. What that means is like these things are, a lot of people use these to trade legacy markets. They have great integrations there. They don't have great integrations with crypto. So all of the ones that are built up in this market specifically for crypto are great. I like the Bookmap multi books now, where you could combine spot markets, combine perp markets. I think that I trust the data feeds for some reason more on legacy platforms integrating with crypto. They're expensive, but I've used a lot of crypto platforms, flow platforms, and seen like stale data so many times. Like something will change on the actual exchange, positioning will change, orders will get yanked, whatever, and it won't be reflected right away on some of the more popular flow platforms. Exocharts is great though. Hype is an interesting question. I think that Hype is a really ambitious project. I think the great thing about Hype, which is one of the reasons why I like it so much, it's like the first thing in a long time that I have used and really like. And, the market also, it has a ton of mind share as well. Like, it's not like you have to convince people that it's a great product. Like, a lot of people are using it. We're using it. It's in its earlier days, obviously. So owning some kind of equity or something that's associated with equity seems smart, right? If you understand how exchanges in this market work and how they're rewarded over time, like they're money-making machines. What I will say is the thing about hype that's a guarantee is that they're going to have KYC at some point. So that's a guarantee. It's a matter of when, not if. And that will probably change a lot, right? That'll change a lot of things. But you never know. Like, who knows with this coming administration, how strict things will be. You have to be open to other possibilities. But they want things onshore, right? I think RWA has a ton of potential, but it's like, you could be too early, you could be too late. There's really not much in distinguishing the P&Ls from those decisions, right? So too early looks like too late. So I don't know where we are with that. I think that obviously the financial system is going to be tokenized largely. There's a lot of things that are going to come out of this little experiment we've had to this point. I just don't think I'm qualified to talk about which ones are good. GCR's edge. Experience. I don't want to go into, like, I've had the benefit of, I guess, having access to him for a while now. And he's just different. He just has a special quality that I've only really seen outside this market. And actually, like, most people might run into this if they actually pick up some trading books on some of the greats. He just has that. He has a gift. It's not to say actually that he's wrong, right? I've had the opportunity to see him be wrong about things, but it's nothing in the face of all the things that he's done, like perfectly. But I can't really speak to his edge. He's got something. Bookmap configuration. I'll share that in the Telegram after. We're approaching an hour. I'm gonna hop off shortly in a second. I still have the Discord with all of my templates. So what I'll do is I'll share that in the template room of the Discord, so it's all organized, and then I'll share the Discord link on the Telegram. User experience with Agribin. Agar is like Agar has always. I have not been at the desk without having my Agar up for the last, I don't know, since Agar came out. 6 years, 7 years. It's definitely got much fancier. Like, originally what I used to do, which I thought was special, used to talk about this as if it was like something brilliant. I used to split all the tapes up. I used to talk about splitting up the tapes between markets because different venues were responsible for price discovery over other venues. And the perp market versus the spot market, I don't want to look at the tapes of those combined. And now you have you have 1,000 different iterations of Agar, or not iterations, but you have people sharing templates all over Twitter. And it's, it's much more granular. It's much more granular look at the market, but it is one of the most truest looks of the market, right? Not looks of the market. It's a bad way to put it. Like, it is the market in its raw form, right? The buys and sells that are coming through on any given day, how those interact with the order book. That's how markets move. So, what you could spend a whole day if you just want to study the market. Just, the trouble with Agar is, like, you don't have historical data. So this is where spending money, and just like if you're trading like a professional, it's a business, right? You have to put up money for all this stuff. The benefit of being a large account is getting a lot of it for free. I don't get a lot of the stuff. I just end up paying for now because I don't want to be that person who wants things for free. I only take things for free if people just throw them at me. But I pay for my Bookmap. I pay for almost all my software. The benefit of buying like high level software is that you could load old data down to like the, depending on the platform, like the order book and the times and sales. You can't do that with Agri, but one thing that's useful is like, just if you're trying to get an idea of how markets behave, just mark off the most important levels on the chart, which are usually your highs and low extremes, right? And then set an alert around those levels, and then watch the tape, watch your volume charts and your CVDs around and through those levels, and see how the market behaves. And just do that for hours on end, and you'll begin to put two and two together, right? I'll share those that stuff in the Discord, and then I'll tag the Discord again in the Telegram. The Telegram is now a stream of thoughts, and again, I took off for the potty training week, but the Discord is still like an archive of all my templates and like valuable things that I think are really valuable, like knowledge bites. Invest into index. Yeah, I was talking to a couple cop buddies of mine today because they talked about their retirement accounts. They're like, yeah, I'm in high yield stuff for the first 10 years. I was like, oh God, like high yield, like returns are geometric. You're going to have some kind of massive drawdown, and it's going to change the trajectory of your investment profile. Just buy the S&P. That's my advice to everyone who asks me how to invest, because I'm not an investor. I buy the things that I own and use on a day-to-day because I think that's just a rational thing to do. So if you use Apple products, why don't you own Apple stock? Like if you're buying a new iPhone every year, how come you're not buying Apple? But no, otherwise, like buying the SPY, buying the QQQ, the IWM, buying these ETFs, and just don't look at them. Like most people are not going to beat the market. I trade, So obviously, you have to come face to face with that often. How are you trading relative to just buying and holding? The benefit of trading versus buying and holding is variance, right? You're able to control your portfolio variance. You're able to be out of the market, not experience all the drawdowns and peaks and troughs, and you have a large sample size, right, by trading frequently, so you could see what kind of edge you actually have. But I think that's that is something that is let me get my Discord link. I think that is something that is really important, right? Yeah. Trading, like higher frequency trading, so my trading from like 1 minute to 1 month, you have more variance control, and your edge is validated like right away. Not right away, but much faster than being someone who's like an investor and I don't know, developing some systematic approach to investing, missing out on buying and holding the S&P. No, the other Discord. Let's see, I'm just looking at it right now. So I have a room called My Templates. I'll throw that in there. But I'm going to log out, guys. It's been a pleasure. I'm going to use the YouTube streams now because we were doing the Telegram streams through Telegram, but those weren't being recorded at first. And then I tried to hop on. We did a couple ones that were recorded. Had one transcribed, which is cool. And then tried to do the live one for some reason, and half of you guys could see video, half of you couldn't, or hear audio. So we're just going to use YouTube again. So I'm just going to be on YouTube again and sharing the link in the Telegram, and we'll at least do once a week, right? I should never make promises about how many I'm going to do, because at some point I'll schedule a stream and just think, I don't want to fucking stream. Super ambitious early in the morning about what I want to do, and then at the end of the day, after chasing like a toddler around, happily doing that, who wants to spend time on the computer talking about the market, rather than laying on the floor playing horse for their child to ride on their back on a hardwood floor and feeling the pain on your knees? Who wants to do that? Being facetious. All right, guys, I'm out.